All right. Well, good morning, everybody. Happy Tuesday morning. Happy Tuesday morning, the 10th of March, 6:30 a.m. my time. Let's get rolling. How you guys doing out there? Hope you're doing well. Give you a second to pop on here. I'm gonna get my charts up and running, up and rolling. Let's do this. Get my calendar up and running here. And get my voice a second to wake up. All right. Well, ladies and gentlemen, what have we got rolling for today? Just taking a quick look over here at Yahoo Finance, see what the 30,000 foot view looks of the finance side there. See if there's anything on here that I care about. Trump's big, beautiful bill. Exxon eyes. Okay, so yeah, and oil sinks. Guys, we had quite the turnaround yesterday. A little more of a risk on day, which was kind of a nice little break in the action of downward movements we've seen on everything. Everything pretty well reversed hard from yesterday. Talking about things like the dollar, oil. Okay, they had some pullbacks. Oil, especially. Let's take a look at oil. Actually, show you guys the rebound. It actually had a 30. So oil had a 1/3 movement yesterday, 1/3 range movement, meaning if we go to the daily chart here, so this is US oil, and if we go to the very top, to the very bottom, we had a range of basically 33%, so a third. Okay, from the swing high all the way to the swing low. That's 33%. That's 1/3 of the total price of oil movement in one day. That was pretty big. Pretty big. Now, it all really started Sunday evening. Sunday evening my time. Should have been about 9 o'clock, where we was at the high for U.S. oil of 119.5. Okay, and then we come in yesterday towards the end of the day, end of the intraday trading day, the New York trading day, and we go from a high just the day before of 119.5 all the way down to 81. 81. So that's a 33%, pretty much a 33% pullback. Well, part of that was the fact that President Trump had had an interview. I think it was a phone interview. I don't think it was a video interview because I haven't been able to see the video anywhere, with CBS, and basically said, hey, and I'm paraphrasing, but he basically said the war was all but done as far as the most important parts of it. Talking about the Iranian Navy, the Iranian Air Force being just completely decimated. They're just in complete shambles from where they were just a week, a short 8 days ago, 9 days ago, I guess 9 days ago, 10 days ago today, when the shooting started, when the bombs started dropping. So they've basically taken care of business. And so he just uttered those words, just basically uttered those words. And I'm trying to remember, actually, I'd like to see if I could find that exact article, but I couldn't find it earlier. Yeah, this might be it. Well, this is CNN. Ugh, CNN. Yeah, here we go. Oil prices fell sharply after President Trump said the war with Iran would be over very soon. Okay, it's still volatile at the moment. Oil is. Everything is, really, but especially oil. But yeah, that's basically here we go, CBS. So it basically called markets. I think the war is very complete, pretty much. Okay, that's how he ended that sentence, verbatim. And then he goes on to talk about the Strait of Hormuz, talking about if we could potentially occupy it, I guess. Or I say we, I mean the United States, potentially occupy the area so that there's no landmines out there. The U.S. Navy is having to sweep the sea over there to mine for all the landmines that Iran has been throwing out there to potentially destroy ships. So, yeah, he's basically seeing to it that that's not going to be an issue. I think it's something like 1/5 of the world's oil comes through there. So, that's obviously part of the reason oil has spiked so hard because of all the threats and all the mines, the sea mines that Iran has been putting out there. So he basically said, hey, if they keep it up, we'll just take it over. So no screwing around there. But yeah, like it shows right here. Okay, Brent actually went up to 120. It actually crossed ahead of $120 a barrel at one point. But again, basically not long after he made that statement, we just started seeing this sharp reverse. So, somewhere in this area, I do believe is when he said all that, right in this area. So it had already kind of spiked downwards, probably from a lot of profit taking towards the end of Asia session on Monday. Okay, late Sunday into Monday here in the States. So it had already kind of started that decline. But then right in this area, somewhere in this area is where he made those comments. And when that happened, look at that, price just dropped the rest of the way. So that's look, it's very volatile, but it's a good thing. I mean, we don't need no $120 barrel in oil. That's for sure. And it's still high where it's at 80s. In the 80s, it's still pretty high, but it's better than 120. So yeah, as soon as that happened, basically you started seeing a spike in the risk on assets. If we go take a look at the indices over here. Okay, let's go look at S&P. Okay, we saw a really sharp. There you go. There's your daily candle right there. I mean, that's a very nice gap down, but push up, push strong. A lot of volume, a lot of volatility came in. And then now we've kind of bounced into or close to these supply zones here. Let me refresh my screen. Okay, so I was kind of keeping an eye on these supply zones here as a potential place to let it bounce. So yeah, that's exactly what's happened. Basically bouncing off these supply zones. Here you go. Here's one for the NASDAQ right here, bouncing into the supply zone here. And as far as the Dow goes, yeah, we got close. So in light of that, the Dow, as far as yesterday goes, now we're having some issue with the top setups page. For some reason, it's not calculating our scores. So I actually just utilized Grok to help me out with adding everything up. And I do know that Dow was on the bearish list yesterday. Is it not on here? Oh, it's still on this page. Okay. So yeah, -5. So I don't know. I don't know if I want to be taking advantage of that sell opportunity with the words that came out of the president's mouth yesterday. Okay. Now we are again bumping up into these 4-hour supply zones. I do have an alert set right here. We didn't quite hit this one like we did the NASDAQ, but just ahead of it, we do have a daily 4-hour confluence that I personally prefer a lot more. Actually, I don't think that's a 4-hour. That's a daily 1-hour. Yeah, daily 1-hour confluence up here. So I had initially had an alert here. I'm probably still going to be interested in this one up here. I just don't know so much about this one because with the words that came out of his mouth, that's obviously risk on. That's obviously bullish. The markets took it the right way. So I don't think I really want to take advantage of this alert right now. I just the geopolitics of it, might be stronger than this 4-hour supply zone by itself. Perhaps the one up top here, the daily 1-hour confluence. So I think what I'm going to do is actually take this alert and just move it up here, because this one up here, at least it's stronger because it's got the daily, which is the yellow box, the daily zone, adding a little bit of an extra layer of protection, if you will, for this 1-hour zone. But this one down here being a 4-hour and it just kind of being on its own, it's really only got the one set of eyes. And not only that, but I didn't really care too much about the volume spread analysis candles. It just doesn't appear that there's a ton of trading activity here. Now, there is a resistance line here. Okay, well, it's a support here. But if I go back in time, we had a former resistance line, and that's what's basically going above that 4-hour supply zone here. But this one up here has another resistance line kind of going through it. So yeah, I'm basically going to ignore this 4-hour supply zone. Now, the reason I like this supply zone so much is because it does have a very sharp drop from it. So it is the origin of a very strong move down. But the same argument could be made for this area up here as being an origin of a strong move down. So with this supply zone here being nestled inside of the daily, also having this former resistance point going through it, that's going to be my new favorite area. And also price will have to pierce my 200 moving average before it even bounces in. So that's what I want to see anyway. I want to see the 50 below the 200. And then again, price must pierce the 200 moving average. So that's basically the new move I'm interested in right there. And not only that, but this 4-hour zone that I have drawn up here, it's really skinny. It's really narrow when we start comparing it to, the range of some of these other big red candles around it. I just feel like it might be a little too skinny. When I look at supply zones and demand zones, I try to go for zones that have a little bit more meat to them, that look a little bigger than this one here. I mean, we could very easily just get a wick right through that. And here's the thing. Okay, banks like to chase the premium prices when they're trying to short. So where's the premium prices? Well, it's as close to the origin of the overall strong move down as possible. So this supply zone with a gap underneath it, okay, even on a 1-hour, this supply zone is higher on the curve. They can sell for a lot more premium up in this area than they can here. Okay? It's just a higher price. Much like we want to buy as cheaply as possible in demand, as close to the origin of an overall strong move up. Okay, we want to do the same thing in reverse. So I think that's probably going to be a better area. You also can see the volume spread analysis candles getting really big and fat. Okay, after leaving the base, after jumping into these leg out candles, you can see the volume down here. I mean, it really picks up hardcore. That is healthy looking volume leaving a zone. That's way more healthy compared to this one up here. Okay, the first one I was looking at. You can see the green candles coming out. That's average volume. I don't really like average volume. I like above average volume and ultra high volume. So remember, yellow candles, that's above average volume. Okay, above average volume. And then the red candles are ultra high volume. That's what I like to see leaving a zone, because that tells me there's a lot of institutional activity taking place. Remember, we're trading small amounts, us retail traders, relative to the bankers, relative to the hedge fund traders. Okay, they're prop traders, banks prop traders. They're trading much, much larger position sizes than you and I. They've got millions, hundreds of millions of dollars to spend on this stuff. So to me, that red candle, and really all these yellow candles, but especially the red candle, that's an institutional footprint, because they have the ability to make giant movements, giant trades. So that's a lot of trading activity, and that's why I'm more excited now on the Dow. If I were to try to take if I were to take a stab at this -5 score that it is giving me as far as shorting, especially because it's an index and these things go up way more often than they go down, then at least give me a very strong zone, in this case daily, with the 1-hour nestled inside of it, with a lot of institutional volume. Yeah, that looks a lot better. And we're going to we will be forced to pierce the 200 EMA. Yeah, I like it. And that's not to even mention the daily side over here, the daily chart getting red candles. Remember this, I've got an indicator on here that kind of takes out, like we're in a downtrend. It'll still mark green candles red, just showing that, hey, the overall momentum is down. Okay. And also the 8 EMA over here is below the 200. Or excuse me, the 8 EMA is below the 21. That's what I meant to say. So yeah, everything's looking pretty good for this potential short, but I just need price to come up to my supply zone. I need it to come up to a more premium price, the premium zone up here. So yeah, obviously we've already had a big rebound from the, partially because of the words that came out of the president's mouth, but yeah, I can see price turning over here. Because remember the at the end of the day, the fundamentals and the sentiment, they're in the favor of shorting this. The big banks, if we look at the commitment of traders report, the COT report within the sentiment analysis, okay, they favored the bears. I mean, that's just a fact. Let's go have a look at the COT report and see what it shows for the Dow over here. Okay, here's the Dow. Remember, they increased their net short percentage by 4.9%. So if the banks, if the hedge funds as a whole, as a collective whole, if they went net short last week, then that's the path I want to follow. Like I said, the COT report to me is one of the biggest factors over here on this list. We've got 14 fundamental indicators. We've got 2 for sentiment, and we've got 2 for technicals. So to me, the sentiment, the COT, this is one of the biggest ones. If I'm going to be shorting something, I highly, highly prefer to see the banks on the same side, since they're the ones that make all the money, right? So that's good. That's a good sign right there. And then following that same logic, the only other 2 on here as far as the shorts is going to be the Euro Aussie, the Pound Aussie. Well, let's think about those 2 for a minute. Which one of those 2 would I choose to short? All things being equal, and let's say both of these hit the supply zone at the same time. Which one of those? Because to me, it's a clear choice. And it's not even necessarily just the scoring. Okay. Yeah, the scoring has the Pound Aussie is 1 point more bearish than the Euro Aussie. But I personally would be selecting the Pound Aussie. And the reason is the pound is the weakest currency, guys. If I go to my macro scanners, take a look at the surprise index, you guys remember the British pound over here is underperforming the most. Okay. So you take a look at all the high impact economic calendar events, and it's missing all the expectations. It's missing 4 out of 5 expectations. So forecasts, guys, on the economic calendar over here. Okay. It's missing 4 out of 5. Well, let's break that down for the British pound. Let's go have a look at the individual currency. There you go. You've had one bullish report of late. That was the retail sales, where they had a nice, really nice number actually for their retail sales number. That was back on the 20th of February. But ever since, they've had 2 neutral items. And remember, anytime we have a neutral box on here where they actually met the forecast right on, it's neutral, and it kind of cancels itself out. It takes itself out of the equation. Why? Because, well, that was priced in. It was priced in. So what we want to do is only look for the ones that beat expectations and the ones that missed expectations, and turn it into a simple math equation, because that leaves 5 reports where it either beat or missed. And 4 out of 5 were bearish. That means 4 out of 5 missed expectations. Okay, they missed expectations on their GDP number, their purchasing managers index for the manufacturing sector, the producer price index down here, as well as the unemployment rate. Unemployment rates went up 0.1%. So 4 divided by 5, okay, on the misses, that's 80%, which means they only exceeded expectations on 20%. So that right there is why the British pound is the number 1 weakest currency. So any chance I get to short the British pound, that's where I want to go. And then obviously on the flip side of that, any chance I get to buy the Aussie, that's the route I want to go. 83%. I mean, it's exceeding expectations on everything. Let's look at the Aussie, break it down individually real quick. And if you guys have anything you'd like me to check out, let me know. Any assets. I am in a pound dollar short. I'll get to that in just a second. Going to see if we could take advantage of this pound weakness that I just mentioned. But partly also real quick before I go to the Aussie dollar, as far as the US dollar, we're getting 60%. Okay. So it's given us a little bit of a bullish signal for the dollar. Remember, for me, anything in the 40 to 60 range is a little bit on the neutral side. If it's 60 or higher, then that's given me more of a reason to try to buy that currency. If it's less than 40, that's given me that's given me the interest in shorting it. So the pound is well within that. It's 20%. The US dollar, it's exceeding expectations on 61.5%. So that meets my requirement to buy it. So I'm just trying to take advantage of this weakness. Pound weakness, dollar strength, pound dollar, that's my short. And again, now, and this was yesterday. This was last night when I got in this trade. Pound dollar. Where are you at, pound dollar? I feel like I'm missing pound dollar on my list. Where are we at? Pound dollar, pound dollar. Yeah, and by the way, guys, again, this happens every now and then where the scoring doesn't add up. So I'm sure they're probably on it first thing this morning. Where's pound dollar? Oh, it's right there, -6. And that's the other reason, guys. Edge Finder's giving me a -6. Trend is down. Yeah, there's just more boxes that are favoring the bear side. Okay, MPMI, both sectors of the PMI data favoring the bears. Consumer confidence, PCE, unemployment claims, and ADP. That's all favoring the British, favoring the U.S. dollar over the British pound. So you add it all up, -6. Edge Finder's giving us permission to sell. So let's go to pound dollar. And we can see over here on the right side, my daily chart, we got our 8 below the 21 as far as the EMAs. Check. Okay. And when we go into the execution time frame, let me see here. To start with, I kind of drew up I drew up a couple zones just to see which one was going to take, right? Ultimately, settled on this zone here. It's okay. This is the zone that I'm hoping will catch a move to the downside. Even on a 4-hour chart, we're just about to hit into the 200 EMA. So I like that because obviously I used the 1 hour for that, where we pierced it down here. But remember, just because we pierced the 200 down here doesn't mean I just want to short this thing. Still have to catch unfilled orders. So that's what we was waiting for up here. Actually bounce into these supply zones that we see over here. Okay. Wasn't quite sure if this zone down here was going to be the one to catch it or not. Either this one or this one. So I actually got in down here. Actually got in off of this zone down here. Okay. Had a little bit of a drop. Then we've since bounced overnight while I'm sleeping into this other zone. So I'm glad that I put my stop loss clear up here. Okay. That's keeping me safe because this is a zone on top of a zone. If I see two supply or demand zones in a row like that, well, I just think of it as one big zone. Combine the two because I don't know if it's going to catch, nobody knows if it's going to catch down here or if it's going to catch up here. So, yeah, this just basically gives me two chances at it, two stabs at it. And then again, I've put my stop loss up here right about, I think right about there. So still in this trade, it's getting a little too close for comfort, but hey, look, we're still -6. We still have that doesn't change the strength of the currency. Okay, the pound, the pound obviously is still the weakest. Now, the Trump interview with CBS has probably it's basically ignited the risk on environment. And what is the British pound? Okay, at the end of the day, the pound, which I'm shorting, is a risk on assets. So, guys, this is something that you can never foretell geopolitics. Okay, had he not said that, this thing would probably be dropping a lot more. But when he said that, the markets liked that. The markets liked the risk on sound of that. So the market started buying the risk on currencies. What are the risk on currencies? Well, British pound is one of them. Pound, euro, Aussie, New Zealand. Okay, those are your main risk on currencies. Canada dollar, obviously tied heavily to oil. And then obviously when we're looking at our not risk off, but when we're looking at our safe havens, that's the dollar, the yen, and the Swiss, right? So obviously, I'm glad to hear that. My trade wasn't glad to hear that come out of President Trump's mouth, as you can see. But hey, that's trading. That's life. We'll see what happens. So yeah, we're in that trade, and that's the only one I'm in at the moment. So what else have we got? Yeah, like I said, the scoring. Hopefully they'll get this updated here this morning, but I'm just going to ignore the top setups for now because I've already got all my alerts set over here. And before I get to that, actually, taking a look at the economic calendar, guys. Again, today, Tuesday, we don't have any red folder events. All we have is yellow folder. But of note, yesterday, even though it was a yellow folder, we did have a even number come out for the yen as far as the GDP number. Okay, that was expected at a 0.3%. Now, this affects the yen, which is obviously going to affect it over here on our currency heat map. So let's look at the yen real quick. Okay, there we go, GDP. Wait a second. Did I look at the wrong number? GDP. Oh, yeah. Previous 0.1, actual 0.3. Hold on a second. Well, that ain't making any sense. That right there says forecast 0.1. I think a number might be off. Yeah, I think the forecast is off. I think that should say 0.3, but yeah, I'll probably holler at them about that after the show. Yeah, because I think that should say 0.3. So I think something just didn't pull over correctly. Okay, well, the Japanese impact is actually the same. Yeah, so this number down here is still correct. Okay, they've basically exceeded expectations on 57%. Guys, give me 1 second. I'm just going to wipe my nose. It's nice and warm here, guys, and it's spring weather. And every time the spring gets here, my nose goes crazy because of the pollen and the hay fever and everything start coming out. I start sounding like Conway Twitty for a couple days. So I got out of the house yesterday to get some groceries. I had to go pick up a couple things. So it was my first exposure since it warmed up this week. So apologize for that. But anyway, I digress. As far as today goes, though, yeah, nothing major. We do have, let's see here, German trade, French trade. The PPI, okay, so the Japanese PPI will come out. That'll be important for the currency, the individual currency, as far as the matrix goes, that the individual currency matrix over here. And that's it. Tomorrow we've got inflation numbers coming out for the dollar here in the States. Okay, that's coming out at 7:30 my time, so that's an hour prior to the market open. And looking at the year over year, looks like we're projected to stay the same on the year over year number over here. Core is going to drop 0.1%, it looks like, or that's what the forecast is, while the month over month is looking to increase by 0.1. So yeah, the year over year, that's the main one that we look at here. And then obviously our weekly crude inventories. This is going to be an interesting number to watch after all the supply disruptions. Don't even have a forecast for it yet. So yeah, that's going to be interesting to see. Thursday, our weekly unemployment claims comes out. Looks like we're projected to remain around the same. Looks like 1,000 gain on that. And then Friday's the biggest day of the week as far as red folder events. Okay, we got the GDP for the pound expected to increase by 0.1%, 2 a.m. my time. Then we get over to the New York pre-market. Canada's employment numbers come out. The employment change, yeah, it looks like we're forecast to have a nice increase there for Canada. The unemployment rate, though, is expected to increase along with it by 0.1%. They're up pretty high, guys, 6.6%, 6.5%, pretty high. That's a pretty high unemployment rate. What are they doing up there north of the border? My goodness. Get them boys and girls some jobs. And then the Fed's favorite gauge of inflation on Friday as well, PCE. This is the core reading, where they're expected to remain the same, as well as the first batch, the preliminary number for the quarter over quarter gross domestic product, where we are expected to increase by 0.1%. Hoping to see that big, beautiful bill that Trump signed. You know, it obviously took effect as of January 1st. So hopefully we can start get some good readings coming out of that at some point. And then lastly is the JOLTS job openings number increase, or expecting an increase of 250,000 on the JOLTS side. So that would be a good number there as well. So that rounds out the week. It's a light week overall, guys. I like light weeks overall like this at times, because that just means I get to use a lot more pure supply and demand strategy without having to worry about all the hiccups. What's going on, Zambezi? Have you been on long? Yeah, 6:30. Yeah, I was 32 minutes. We don't have to deal with changing times here. Oh yeah, I gotcha. Yeah, well, our time changed Sunday, and it's funny because I had a Zoom meeting yesterday with one of my trading teams in London, and I got on an hour early thinking it was on time, but I forgot that London is at a month behind us when they change their times. So I got on there. I'm like, where the hell's everybody at? And I was on for 15 minutes, and before realizing, oh yeah, duh, we're the only ones that change times. And I should have known. Like, I knew Mexico, for example. I know they're a month after us as well. I just didn't think it was the same way across the globe. But yeah, I used to live in Mexico, so I do remember the time change there was delayed a month from the U.S., but I didn't know that was the way it was in the U.K. So anyway, yeah, and yesterday was a little rough. I mean, actually, Sunday night was rough because it was hard to get to sleep. I think it was 1:00 when I got to sleep, just because my body was not ready to get to bed yet. So I got up, my normal 5:30 or whatever it was. Like, tired yesterday. I had to lay down, take a nap. Usually takes a couple of days to get adjusted to the new time. But yeah, so yeah, 7 a.m. my time here in the States. But yeah, and I didn't even think about that. I should have probably looked up the rest of the country, the rest of the country's time zone changes. But anyway, yeah, as far I was just telling everybody at the outset of the show, for whatever reason, our top setups page isn't getting everything calculated. As soon as I refresh it here, but it's fine because I got a ton of alerts set. So I'm just going to go straight off the alerts today, since our scoring matrix isn't adding correctly down here. I've actually used Grok to kind of add everything up manually for me anyway, so no big deal. And there goes my damn mouse not wanting to work again. Come on. Stupid thing. God. So I'm just going to spend the rest of the time, guys, just looking over here off my alerts section. But if you guys have anything you want me to check out, let me know. Again, pound dollar, just in case you missed, Zambezi. Pound dollar is the one trade I'm in right now. Took a short off this zone on top of a zone area. So looking to take profits down here Right here is where I have my profit target set. Okay. Stop loss above both these zones. I actually got in off of this zone bounce because I wasn't quite sure if price was going to bounce. I didn't know which one of those zones was going to hit. Nobody does. So I just took into account both of these zones, kind of combined both these zones into one zone. So I took a short here after we had our 1 hour candle close bearish. And then, yeah, overnight, the rest of the Asian session had other ideas, and especially London. London kind of, let's see, let's take a look at this actually. Okay, so yeah, London had a candle push up. So this is probably just a little bit more sweep of the Asian liquidity. And I'm hoping that that's all that was just a liquidity sweep. And now we're going to start trending downwards. That's my hopes. That often happens when we're talking Asia, London, and New York. Asia tends to, they tend to base and go sideways. And oftentimes you'll have London either go up or down, sweep one side or the other. And then New York opens and you'll tend to come in and sweep the opposite side, right? So I'm hoping that's what we're looking at. Just your classic London push and then your New York reverse. Okay, that's what I'm banking on. So we'll see. So far, it's playing out really well, I think, as far as that idea. Of course, there's another way to really monitor that, and that is for me to turn on my, let's turn on my Asian session range indicator, which I don't use a lot. We've had a long weekend, so today is Monday for you. Oh, okay, nice. What did you guys have a holiday yesterday? Seemed like I thought I heard something about a holiday over there. But anyway, yeah, just looking here at our Asian indicator, it basically wraps a box around the thickest part of the volume within each session. So quite often you get prices like what we had on Friday, guys. Look at this. Asian session is the blue box, London is the green, and New York is the white or light. This is a very normal thing. You get this a lot. You get Asia just typically go sideways, and then you get a liquidity sweep on one side like we did here on the first candle of London. And then when that happens, you usually get that sweep down to the opposite side of Asia session, okay? And then what happens is New York opens, and you tend to get this. You tend to get a London sweep. This is actually a perfect example, okay? So Asia consolidation, London liquidity sweep, and then reversal to sweep the other side of the Asia session. And then we tend to trend one way or the other in London. And then what happens? New York comes online. You get a sweep of London. Look at this. This is beautiful. And then a complete trend reversal so that you can sweep both sides. I mean, if that's not a perfect example, I don't know what is. Are you guys seeing this? Okay. That is session trading 101 right there. Consolidation, liquidity sweep, reversal, liquidity sweep down. New York comes online, sweep of London, and then trend reversal to sweep the other side. There you go. I should take a picture of that and post it on my wall. Let's see here. GU is going well, then swept back and took my stop loss. Oh, did you get short as well, Zambezi? Oh, International Women's Day. Okay. Oh, okay. Yeah, I did. I remembered hearing about Women's Day or International something. Yeah. Okay. That makes sense. Hail to our women. Our women keep us grounded, Zambezi, right? The woman I don't have. I got out of a relationship at the end of October. So it's just been me, myself, and I for the last 5 months or whatever it is. Put a lot of time. Oh, you took Nick's entry. Okay. Yeah, let's go back to that for a second, to pound dollar. Because I do remember, let me see here. I don't remember. What was the entry, Zambezi? Because I know he does his trades mainly from a daily. And he'll go down to a 4-hour too to, let's see, what trade did he do? I feel like he did something. Well, if I know Nick, I'm sure he probably did something like this. Let's turn our drawings back on. I feel like he probably would have taken something around here, 135.50 area. Because he does his supply and demand zones a little different than I do. I feel like he might have done something similar to that. I don't know. What was the price? You were happily married, according to my wife. I was married once. I was married to a woman from Mexico. Loved it. It was a good time, but yeah, she just had other ideas about life. So 133.68. Okay, so that's what I was guessing. Yeah. Yeah, because I know Nick likes to take advantage of a lot of these, daily former resistance and support lines. Well, that's what I call them anyway, but I know he refers to them as supply zones. So there's more than one way to skin a cat with this stuff. I mean, the way I see supply and demand is not going to be the same as everybody else. And all that matters is if you're making money. So yeah, okay. 133.68.9. $133. I just want to mark it out. 3689. That way I can see it. Well, hold on a second. Where'd my line go? Oh, that's not right. Oh, yeah, that is right. 133.689. And you shorted it. Was you using like this line here of resistance? I guess I'm trying to figure out what your reasoning for getting in that was. Because right here is 133.689. Were you looking at it on a smaller time frame? Yeah, I don't know. Yeah, for me, I needed a more expensive price. So that's why for me personally, I waited for these supply zones up here. The 4-hour is about the best picture I could find right here. Again, if I go to a 1-hour, I actually had another zone down here that I was looking at as well. Actually, I'm sorry, I clicked on the wrong one. So 1-hour. Let's go back over here. So this is what I was looking at. Yeah, I was looking at this 1-hour zone here, but I was also looking at this zone. So this was my zone on top of zone. I combined these zones is basically what I did. 134.10 was your stop loss. Okay. Okay. Yeah, I guess that would be the only thing I would say is to me, that's a little low on the curve, just mainly because I look at everything from a little bit of well, obviously you guys know my supply and demand zones. If I go to a 4-hour, we did have a supply zone here for a brief while. Okay. So okay. So if you're bouncing off the supply zone, I could see that. So that makes sense now. That would make sense. MT reasoning, because Nick said so. Yeah, Nick, he tends to make his trades off a daily. I don't normally do daily. I usually do 4-hour, a lot of 1-hour lately, I gotta say. But he also has the thing with Nick's trades is he has a much bigger stop loss. Like for me, if I have a fallacy, it's choking out my trades and getting them and just not giving them enough room to run. That's one of my challenges. Am I running into oh, shoot. I just realized it's time for me to get up out of here, guys. I got to get ready for my stream. Okay. Yeah, I just realized that. I got to hop up out of here, but we'll finish this thought real quick. So yeah, for me, yeah, that's not. I mean, look, it's not bad. Anytime you can follow Nick, follow Nick. But just keep in mind he gives very wide stop losses. Okay, much wider stop losses. Again, it's because he's looking at higher time frames. So for me, just to finish my thought about myself, yeah, I'm the same way. I have a history of choking out my stop losses. So that's why this one here, this pound dollar is a perfect example of where I've gotten better at trading, because ordinarily I would have taken my stop loss and just trusted that zone and just putting my stop loss right about there in the old days, guys. That's just too, obviously I'd have been stopped out, right? So for me, I try to look at the price just above the zone or below if I'm looking at demand. And if I see another zone, like this example here, a zone on top of the zone, then I combine this now into one big zone. And not only that, I'm not going for as big a reward risk trades. I'm mainly looking at 2-to-1s right now. They just seem to have been working a little better for me lately. So, for me, the way I measure out my stop losses now, I don't know if this will help you or not, but it sure did with me. Since I got into the trade here, I measure from my entry down to the swing low. In this case, I was, looking down here at this swing low. And I look at that and I say, okay, that's 150 pips. Well, what's 150 divided by 2? Well, that's 75 pips. But that's a little high for me. So my goal now is try to shoot for about a 50 pip stop loss. But if nothing else, take your distance to your potential reward wherever you're planning to take your profit, and just divide it by 2. So this would obviously come out to 75 pips, but for me, I actually dropped it down closer to 50 because I don't think I need that big a stop loss. I was only doing, hell, 3 to 5 pip stop losses, 10 pip stop losses. But this way, it takes away from the reward to risk, but it's been winning more trades, what I've been finding. So yeah, I basically, I didn't want to go down to 50 because that would put me too close to this zone. So I basically gave it a little more room on top of this. So about a 60 pip stop loss is what I ended up doing for this. And because I put in the wider stop loss than I'm used to doing, it's, hey, look, I'm still in the trade, right? And again, just going back to the Asia, just going back to the Asian session range, I turn that on. Again, we get our Asia consolidation. London typically comes in and takes price one way or the other to sweep the Asia liquidity. And in this case, it's actually, we had that spike up and now we're trending down. So the goal here is trend down and now take out Asia liquidity on the other side. And then New York obviously will do its thing. It'll either continue the move down, which I'm hoping it will, or it'll reverse it and go back and sweep London liquidity, right? It basically is the overall consolidation expansion pattern, which is master pattern, okay, which is Wyckoff theory. So, yeah, I'm banking on that. We've already swept Asia liquidity. Now I'm banking on it to reverse and sweep the Asia liquidity on the other side. So we'll see how this goes. I know I'm blabbering. But guys, I'm going to hop up out of here. Trader Nick's on now. So let's go. I say we go hop onto there. I'll probably come on after and do another 30 or 45 minutes after the show ends today. I personally am on today at 10:45. Actually, let me just show you guys the schedule real quick. A1trading.com. As always, guys, you can go to the live stream tab up here. You can find our schedule over here. Today I'm on at 10:15 New York time. Remember, yeah, time change, obviously, guys, we went ahead an hour. So, but I think on days like today where the streams start early. Wait a minute. Never mind. I'm sorry. I thought today. Okay. I'm just looking at the totally wrong day, guys. So I can stay on because he doesn't start for another He doesn't start for another 40 minutes. My gosh, guys. Okay, so never mind. I'm going to stay on until the bottom of the top of this next hour. So let's go have a look at some alerts. Let's go do that. Let's go do that. I was looking at the Wednesday schedule thinking it was Tuesday. Yeah, 40 minutes. Yeah. All right. So yeah, just again, when I was looking at these top setups earlier, gosh, come on, upload. What the hell is going on? Okay, I was talking about the Euro Aussie and the Pound Aussie being the most bearish assets at the moment. As far as deciding which one I would want to select, for me, it would be the Pound Aussie because remember, the pound is the weakest currency. The euro, on the other hand, is not a weak currency. Let's go look at let's go back to the surprise index. Okay, so Pound Aussie, pound weakest, Aussie strongest. That totally makes sense. Why I would want to short that. And then the one right next to it, remember, was Euro Aussie. So this is telling me to sell a strong currency. I don't want to do that. So it's an easy decision which of those two that I would select, right? Because I don't want to sell a strong currency if I can help it. In this case, I can help it because I've got a weak currency to pair. So let's do that. Let's ignore Euro Aussie shorts. And as far as the bullish items, this makes okay sense. Although the dollar is fairly strong too. Okay, remember the dollar is at 61% as far as the percentage of high impact events it's exceeding forecasts. So I don't know that I'm that excited about the Aussie dollar. What about the Aussie CAD? Okay, Aussie is the strongest. CAD is, it's a little more meh, but it's closer to strong than it is weak. So that makes me a little hesitant as well. Let me go over here because I've got everything else added up over here. I've also got Aussie Kiwi at a plus 11. So let's look at Aussie Kiwi. Okay, the Kiwi is 42%. So it is still neutral, but it's a little closer to weak. So I would be okay with buying that Aussie Kiwi, and it's plus 11. So that's the strongest asset we got on the Edgefinder top setups right now. So we'll take a look at that for sure. The other three items on the bullish list are Aussie Yen. Okay, Aussie. Now remember, the yen got a little bit strong of late. Okay, the yen was down here with the a little down here in the low 40s at one point, but it's gained a little bit of strength. So it's a little closer to bullish, guys. We're close. Remember, the 40 to 60% range, that's a little neutral for me. Once it starts getting to 60 and above, like the dollar has, okay, dollar and above, that's where I start looking at it as a buy. So, I probably would skip that. Obviously, if I had my choice between Aussie and Kiwi or Aussie and Yen, it's going to be Aussie Kiwi all day because the Kiwi is weaker than the Yen. And then the last Aussie pair that we have, guys, is the Aussie Swiss. So look at here, Aussie strong, Swiss weak. So that's obviously going to be my number one decision between these three Aussie pairs. Aussie Swiss, guys. Now it's a lower score. It's a plus 7, but it's still strong. It's not as strong as the Aussie Yen. It's not as strong as the Aussie Kiwi, but it makes more sense to me to be selling the Swiss more so than trying to sell it a stronger currency. Does that make sense? So let's go take a look at that. Aussie Kiwi. Let's look at that one right away. Aussie Kiwi. There we go. Now, it's obviously been making a run. All the Aussie pairs have made a pretty strong run over the last 24 hours. Okay, just parabolic. No, I don't want to say parabolic, but very strong moves up. So when we're looking at Aussie Kiwi, I had a 1 hour demand zone that I was looking at down here. Obviously, I was more excited about this price point when price was still down in this area. But now price has just run away. And what's happened? What has happened from this swing low to this swing high? What have we done? We have broken a structure, ladies and gents. Have we not? Okay, we broke structure and closed. So when we break structures like this and close, the keyword is close, like we did on that green candle, the last green candle, okay, that tells me that we're now in a brand new impulse leg. And when that happens, I want to be buying from a demand zone on that leg. Okay. That is my new favorite point. So since I have an alert all the way down below that, I need to move my alert somewhere, right? So let's go find a demand zone somewhere in this area. Somewhere in this area. As always, where's my curve analysis at? I got to find my bottom, my top, my middle third, my curve analysis. Okay. Where do I want to buy on this area? Do I want to buy up here in this top section? Absolutely not. Because if I buy up here, I'm buying way too high on the curve. I'm buying expensive prices. I'm buying premium prices. What about this middle section? Do I want to buy in the middle? No, I don't, because I don't want to get chopped to pieces. Don't diddle in the middle. I want to buy in discount, guys. So right there presents an obvious demand zone right here on a 1 hour chart. Okay. So I'm buying a demand zone in discount in the bottom third, the bottom quadrant, the bottom section, whatever you want to call it. That's low on the curve. The impulse leg gives you all the information you need to know. Please tell Japan or Japanese yen to be weak. I am still in. Oh, you're in Kiwi yen that I entered February 12th. Wow, a month. Okay. Let's look at that one right after this. Kiwi yen. I want to look at that with you. So if I'm trying to buy Kiwi or Aussie yen, yeah, guys, I don't want to be a buyer unless we get a discount. So you're looking, okay, so you're long, I'm assuming. Okay. So I am actually, now we're a long ways away. Okay, Aussie yen. In fact, how many pips a day does this move? I think this is a slow one. Yeah. So this one moves 66 pips per day. So that's not that much. We're 60 pips down. Okay, so we are currently 76 pips away. So that's, yeah. Even if this thing just straight dropped, it's going to take at least a day, guys. A day and a half to get down here. So I'm going to put my alert on here. Whoa. I'm going to put an alert just ahead of this. What in the? They have changed this again. They did a little bit of a change on TradingView alerts for some reason. They did this the other day, but it looks different yet again. So I don't know what's going on. Okay, I want to take this alert and put it right there on the proximal line of that demand zone, because that might be a potential place to buy. Let me get my volume and up here. Yeah, I mean, it could. The speed out of that, the volume coming out of that move could have looked nicer, I gotta say. Let's go look a little deeper. Okay, and if I go to a 4 hour, I actually have a better signal down here. So here's what I'm gonna do. I'm gonna draw this demand up down here. This is a 4 hour demand. This actually presents the higher probability move. Remember, as close, the highest probability move is always going to be the zone that is closest to the origin of an overall strong move. So that means this 4 hour demand zone right here. So I am absolutely going to move my alert now down to that zone. But I still want to keep an eye on this one just because it does look pretty decent from a move out perspective. Well, we didn't close above this. I guess we didn't close above this line, did we? Not initially. Let's look. Did we close above that line right here? No, we didn't. We wicked in, didn't we? See how this wicked in? This is actually a pretty good teaching point. So from this demand zone, we had two bullish candles, two strong bullish candles that bounced up and broke structure, but did not close. See, we had it wicked in there, but we did not close. So that means prices are testing a new high, but rejecting them. So it did eventually break through, a handful of candles later, but not on the initial move. So because on that initial move, we did not have enough strength to close, to me, that's going to negate this zone. And what I'm going to do is leave the demand zone there, but I'm just going to color it light green. It just tells me there's something funky about it. Something funky about it. But down here on a 4-hour, this picture looks better because when price left the zone, we broke that same area on a 4-hour time frame, and yeah, it just kept going. It just gave us nothing but green candles. Oops, I didn't mean to do that. Nothing but green candles, right? Oh, here, I'm just going to delete that. Get it out of my way. Moved my curve analysis by mistake. Oh, good grief. There we go. Now I got everything set the way I want it. So that's it. That's a long ways to move. It's a lot to ask on an asset that's a plus 11 on the Edge Finder. It is a lot to ask, but that's just my 4-hour time frame. Now, that's not to say I can't drop to some other time frames. See if I can't find some zones in some different spots. It's just not as high a probability. That's the only thing to remember, because the higher the time frame is, the more accurate price action. But look, you can't ignore a nice looking zone like this right here. I mean, look at the gap that came out of this. Now, there's a lot of candles to the left. That's kind of the downfall with this. It's in the middle. We're in the middle of the curve. So remember, just because it's in the curve, now I would say for newer traders, it's just not the greatest idea to be buying in this area. But if you're going to do it, at least drop your risk. It's going to be hard to ignore a nice looking zone like this. Pretty nice. It's a pretty decent looking zone. And that's a 15-minute chart. What about my moving average? Let's get my moving average back in gear over here. Okay, so 15-minute time frame. See, my 200 is still a long ways away. So, yeah, that's probably going to be too expensive when we're talking about the 200. Yeah, never mind. I'm just sticking with this bottom zone, so I'm not even going to draw that one up. That's just, I think it's too risky. So that's your Aussie Kiwi. And then you were talking about Kiwi Yen, right? I think that was it. Kiwi Yen. So Kiwi Yen is giving us a +2, which, yeah, it doesn't matter because you said you got in a month ago. Let's go look at it. And what price did you say you got in Kiwi Yen at? I think you said Kiwi Yen, didn't you? Did I not just see that on here? Oh, yeah, Kiwi Yen. Okay. February 12th. Okay, I got you. I see where you're at. Okay. Well, if you went long there, you have a gone at, what do you mean a gone? 117.22. Oh, Aussie. Wait, hold on a second. Now, were you in? You said New Zealand yen, but then you said Aussie New Zealand. So that New Zealand yen, that's the one I was curious about. You said you were in a New Zealand yen trade at February 12th. 133.68. Okay. 133.68. 1.3368. That ain't making sense. New Zealand yen, there is no 1 point. New Zealand yen open price 1.3368. That's not making sense. We got 93. We got different sets of numbers over here. Did you mean 1.3368 on another asset? Aussie New Zealand, maybe? No, wouldn't be that. Yeah, I don't know. But nevertheless, you said, so if you're looking at the 12, then yeah, I'm confused on your prices there. 91.99. Okay. All right. 91.99. Oh, okay. Yeah, so you got in off this zone structure over here. Oh, were you going for take profit up here in this top area here? The 94.5 or something? I guess that's a long time to be in a trade. Let's take a look real quick. I want to look at the carry trade scanner. Kiwi yen. See if you're getting paid or if you're paying each day. Where's my carry trade scanner at? Oh, here we go. Carry trade scanner. Kiwi yen. Okay, well, at least you're getting paid. You're getting paid a 1.5% each close of the intraday session, so that's good. I mean, look, I like it. You got in at a decent area down here. How come you didn't take profits up here, though? I'm just kind of curious. As far as the end of February, you could have taken profits up here in the supply zone. Is there a reason, or are you just shooting for this top area up here? But either way, you're in the money about, what, 100 pips? But it's been a month, so, is it worth holding for a month just for 100 pips? If I were in the, and I'm not, I'm just saying if it were me, I would have taken profits by the time we got to this supply zone because we got a daily just ahead of it. You know what I mean? I like the zone area over here. I like that a lot. I like everything about this trade. Your 50 is above your 200 EMA. But I just would have seen this zone right here, which is just ahead of the daily, and I would have been out because look what happened. You were feeling pretty good up here, and then all of a sudden everything kind of went against you there for a while, but kept you in the trade. And now you're back up. So if I were you, you guys hear us say all the time, we're not financial analysts. I just know if it were my money, I'd be taking my profits right here. Because we're about to bounce into a daily supply zone. And let's go find our 4-hour confluence in here. So this is going to be a little bit of 4-hour confluence right here. I'm going to bring this forward here and see what we got. Okay, so that to me would represent your next potential roadblock. And not to mention the daily, which is actually only about 20 pips away. Because see, back here, we hit just the 4-hour. Just the 4-hour, but we did not yet hit the daily. Well, that's all about to change because if I go to the daily again, okay, on a daily, now we're looking, God, I got too many drawings on here. On a daily, we're about to bounce into this candle right here. So think about it. That's a daily consolidation followed by a strong leg out that left a gap. Okay, we left our daily fair value gap from here to here. And then obviously, yeah, you just drop it down to the 4-hour. And now we're starting to get a little confluence going here. So yeah, that's all I would say. Just be careful. If you're in the money like that, hey, just don't give away all your unrealized profits because you basically did here because it came down and, I don't know where your stop loss is, but I'm sure you were sweating down here, right? Doing a lot of testing and my historical data. Sticking to 3R. TP has better return. Yeah. Yeah. No, I'm with you on that because I personally, I'm the same way. I'll get into a trade if it's 2-1, but it has to be at least 2-1. I prefer the 3-1s though. But I also, we also have to be real and recognize when we start bouncing into opposing zones, because they can very easily do what they did here and just catch an ask and drop it all the way down. So there for a while you were sweating it, but thankfully you come down close to some more demand zone structure and it's pushed you back up. So yeah, just be aware. That's all I'm saying. I mean, you're about to come into the daily supply zone, and not to mention the 4-hour that's a little higher up. So, but good stuff. Good stuff. All right, let's have a look at the majors, guys. Let's just take a look just for a minute. Let's turn all the drawings off. Get rid of all. I'm tired of looking at boxes. Get rid of all the crap for a minute. Okay. Let's look at the daily chart real quick over here on the right. When all else fails, guys, there's times where I draw too much crap up and I just like to turn everything off and only turn on the right side of my screen my zones, which means my order block tool, and my master pattern indicator, which is where it shows me my consolidation boxes. So on a daily chart, looking at the master pattern indicator, obviously that's where I'm after. So if I look at where we're at on Aussie dollar, just as example, okay, we got a daily consolidation. So at some point, I want to find out which side of the box that price closes on. Not where it wicks out like it did down here, but where it closes. So we had price leaving consolidation down here, and for a while, it started sucking in some liquidity underneath, only to reverse. So from a very start, when I see these boxes, the highest the highest probability trade is always going to be that first close coming out of a daily. So if we can get price to break structure, okay, tap into this liquidity and close up here, then that's an awful good reason to start looking for longs. But I just need to have that daily close up here so that we break the structure. If we can get that break and close like that above this orange box, so just think of the orange box for a moment, not the other crap. Okay. If we can get that close up here, that's where I want to start looking for retracements into demand zones to buy long. That's the 30,000 foot view, accumulation and distribution look, the master pattern look. And that's really kind of the basis. Now, that's the highest probability. So obviously, the farther away from that consolidation you get, the lower the probability the trades are. Okay. Because this is the very start of the breaking and closing of the consolidation. Hopefully that makes sense. But yeah, like down here, we didn't get that close. We got a little close here, but the point is you had too much wicks. You had too many buyers stepping in if we look at the daily wicks. So that should be a sign to probably ignore shorting right in here. If nothing else, take buys off demand zones that are possibly over here. But I'm looking for a close. That's the first step on any asset. Let's get a close after we leave a consolidation box. So anyway, don't really have that on Aussie dollar. Here's a good example right here. Okay, this is now the euro dollar, where we've been getting a lot of bearish signals lately. We get our consolidation, and right here is our first candle close. That candle right there. So when that happens, hey, I start looking for pullbacks into supply zones. And in this case, yeah, I am keeping an eye on this. Now, remember, the euro is a relatively strong currency too. So I'm not as excited about selling euro dollar as I am pound dollar. And that's why I'm in the pound dollar trade right now. Okay, pound dollar. Now, on the pound dollar, as far as my consolidation, master pattern boxes. There's our consolidation up here. So we get that push out and close, and then we get the retracement into supply, which also spits out a 50% baseline, which basically acts as its own support and resistance. Let's go look at that on a microscope. Okay. So this area right here represents this area over here. And what have we got? We had a supply zone, guys. See this? Okay, we had a supply zone. Did that supply zone work out? Yes, it did. Okay, so it was at the top of that daily box, but it doesn't matter. Just find me a supply zone anywhere in there. So from this daily consolidation, we closed. From this point is where I'm looking for shorts, but I can't short down here. I have to wait for a retracement into a supply, catch those unfilled orders, sell to the downside. So it might be something for you guys if you want to take a look at, play around with. If you use Edgefinder, just go to the just go into your indicators and just type in master pattern. Okay. Right, by Lux Algo. Now this is not an indicator that has any settings. Okay, it's not like a moving average or an RSI where you can play around with the settings. This is just showing naked price action on a chart, but it's showing those consolidations, because from the consolidations, basically what you get is expansion and contraction. In fact, I might have, let me see. Do I have, I'm just looking off on another I'm looking off on another screen real quick because I actually have a really cool diagram I could show if I could find it. Kind of how master pattern price action works. And all it is accumulation and distribution. It's Wyckoff theory, but it's an actionable way to use it. So let me see real quick. I'm just going to see if I can find this picture off screen. Where you at? Where you at? I think I'm close. I think I'm close. Come on. I know you're right here in this folder somewhere. Where are you at? Oh, come on. Where are you at? Where are you at? Where are you? Well, shoot, guys. I'll have to look it up and bring it on the screen tomorrow. I was just basically going to show you kind of an actionable way to, to trade supply or to trade the master pattern, to trade that accumulation distribution. But I can't find it. I'll have to dig for it. But anyway, hopefully that little bit of an example made sense. We'll go look at these other majors real quick. Kiwi dollar. Okay, we had our consolidation up top here. We had our close down here. So at this point, we look for retracements. Look for retracements into supply. Looks like we pulled into this area over here. Wasn't the greatest, but a little bit of supply zone there where we bounced downwards. So that was Kiwi dollar. Probably not the greatest example. Let's go look at dollar CAD. Hey, dollar CAD. So on dollar CAD, we actually had a minor contraction, and then we had a major contraction. So the minor is orange. The major is kind of a blue color. So what the minor says is, hey, we've had the consolidation, and we've had a break of one side of the box. So in this case, we've only had a break of the top side. Okay, liquidity sweep, right? It swept the liquidity over here. Underneath this box, we still haven't reached there. So that's why it's yellow. That's why it's orange. If it's blue, okay, this is the master pattern playing out in the way it's supposed to. You have a liquidity sweep under, and then you have a liquidity sweep over. So it's kind of like the Asia, London, New York we were talking about earlier. Okay, you get the sweep of one side, then the sweep of the other, and then that's where your contraction. These are your expansion legs. So price comes out, it expands downwards, expands upwards. Okay, so lower low, higher high. And then what typically happens is lower low, and then a higher high at some point. Okay. Every time it's doing that, it's sweeping liquidity. This is what wakes up the higher time frame traders. Okay, this is what wakes up the higher time frame traders. When you start seeing that fanning out price action, because we're sweeping liquidity on both sides. That's expansion legs. So this is contraction, expansion at its finest. And then at some point, the final piece of this puzzle, at some point, we start forming an actual trend leg. Okay, where we catch a bid and then we just keep going. Okay, that's expansion. That's master pattern. That's contraction, expansion, trend. There's 3 phases to that. And there's a trading strategy all by itself in that. Now, I use that with supply and demand zones, because when we start getting this, these expansion legs, I like to look for zones to take the opposite side. So, for example, right here. Now, dollar CAD's not on our list, but this is where I like to go over here to my 4-hour chart, see what we got. Okay, so you guys see I've got a zone drawn in down here. And I might even, let's see. Yeah, this is actually working out pretty well. I mean, these expansion legs are what I look for to drop into a zone. In this case, I've got a 1-hour demand zone drawn up down here. So I'm expecting that the expansion legs eventually drop into my demand zone. Liquidity sweep up, or I should say liquidity sweep down, liquidity sweep up, another liquidity sweep down. It's these liquidity sweep pushes that I look for to go into my zones so that I can buy and take the other end. That is by default giving us a buy underneath value, because all these boxes represents is fair market value. We don't want to mess around in fair market value. We want to be, the whole goal with the master pattern is to buy under fair market value and sell above fair market value if I'm shorting. So that's why I love the master pattern, is because all it's doing is showing me, hey, am I buying? Where am I buying? Am I buying under or over fair market value? If I'm buying up here, guys, see, this is where the retail traders are buying. That's the whole point of this. Okay, price breaks the zone, and what do people normally like to do? They like to chase breakouts. Well, what happens when we get the breakouts? Well, that's where the big banks step in and say, okay, no, we're going to push price the other way. Thank you for selling to us so that we're buying your inventory. We're going to buy your inventory and take price up. What happens when we break out of this side? What happens? Process continues. You get retail traders that buy the breakout. And what are the banks up here saying? Oh, okay, thanks for buying. We'll sell you our inventory. And when they sell the inventory to these retail buyers, what are they doing now? Process repeats. They take price down the other way. Now we're getting a breakout of this breakout swing low. So who's selling down here? The breakout traders. Okay, price is going to go down. They're going to feel good for a moment. And then at some point, the banks are going to step in and say, oh, thanks for selling to us. We'll buy your inventory. And then they'll push price up. Same thing happens. You get a break of structure here. What happens right here? You get retail buyers, retail breakout trade buyers buying because we broke out. And the same thing, guys, this process repeats all the time. The banks are sitting up here laughing because they've got plenty of inventory to sell you at a expensive price. Okay, this contraction, expansion, this could carry on for a while. Oftentimes it's just a handful of pops, but sometimes this thing could go on. It could turn into like just a big funneling out price action, or what's the word that they used? We used it at Bull Prime. I can't think of the term, but anyway, the whole point is this creates a lot of liquidity. And after it starts fanning out, it starts waking up the higher time frame traders, guys. So I love seeing this contraction, expansion, price action, because again, I usually look for zones on the opposite sides. Okay. I'll have to make another video about it. I actually made a video on this, guys. If you're interested, I think I might have talked about this last week. Yeah, Tiger Trading Project. I think I did mention this last week. If you guys are interested in checking out more of that, let me just go here. This is just an old channel of mine. I don't really use it anymore because I've got a new one. But if you go into playlists and you go to Trading Foundation, okay, I made this video about a year and a half ago. Right here, how market structure really works. Go check this video out. So it's going to be at Trade Like a Tiger. I'm sorry, at Tiger Trading Project. Go check out this how market structure really works video. Okay. That will tell you about the master pattern. I do believe it's either that one or the technical analysis video. I can't honestly remember which one it was. In fact, when I get off stream, I'm probably going to go browse through it myself. It's been a while since I've watched it. But yeah, again, I just made it. Like I said, I made it about a year and a half ago. But just go to at Tiger Trading Project. I don't know. I haven't figured out what to do with this channel yet, just because, again, I've got my new channel that when I was with Ola Prime. So, and I think at Trade Like a Tiger sounds a little more regal than Tiger Trading Project. That sounds like I don't know what I'm doing, right? I don't know. But either way, guys, hopefully that all helps. I did kind of get off on a side tangent talking about master pattern, but it's good information, guys, and that's how market structure works. The whole point of it is buying under fair market value and only selling above fair market value, right? Because we don't want to be selling under fair market value. Those are breakout traders. Breakout traders, they tend to be buying and selling with the banks who are typically taking the opposite side. So just keep that in mind. Study master pattern. Study Wyckoff theory if you haven't. It'll help you out a lot. And with that, guys, I'm going to get up out of here. I'll be on Trader Nick's stream at 10:15 a.m. Eastern Standard Time, guys. So with that, have a wonderful day. We'll talk to you tomorrow. Peace.